Hey traders, I have an amazing video for you today, and I really want to share something with you that I think most people don't understand when it comes to trading options and what I call the most successful or highest probability trading system when it comes to options. And I'm going to share that with you. I loved enjoying spending time with Tony Robbins and also Arnold Schwarzenegger there as well too. So trading options and the most successful option strategy. Now, when you're trading options, there's a lot of different option strategies out there that you can do. But guys, I've been doing trading now for 15 years, and I've traded everything from iron condors to spreads to selling naked options, which you should never do, or just buying the share and writing covered calls, which simply means just writing an option over it. And sometimes I got exercise, and sometimes I didn't, and all those different instruments. Now, this here is the most successful option strategy, even if you're brand new, even if you're just getting started. And even if you don't know what to do. Now, if you have some experience, okay, if you have some experience where you have a really good successful system, you can start to apply, some really basic sort of options trading and amplify your success and your results even more. But this system here is not about making massive results. This system here is about giving you the most successful option strategy to make consistent results throughout your trading career. Okay, now in this video I'm going to talk to you about what the option strategy is. I'm going to talk to you why it is the most successful option strategy out there, and also I'm going to talk to you about why it can generate an income whether the market goes up or down. Now, this is pretty phenomenal. I'm not talking about going long the market or short the market. I'm talking about putting a position on right now, and if the market goes up or if it goes down, then you still can generate a really nice income. And I'm going to share with you all the details about that and how that works. And also I'm going to talk to you about the best time to actually do this strategy. You're going to absolutely love this. Now, once again, guys, if you like with my private clients, I teach them a really powerful trading system to look for on the charts. And then we simply go out there and we simply buy options. And that gives us a really good return. But if you have no idea how to read a chart or anything like that, or I should say you should have some basic understanding of how to read the markets, but this is just to get you started in the markets, and I'll talk to you more about that. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders, so let's get straight into today's training. I'm gonna talk about this strategy here, but I'm gonna say this here. This is not a get rich fast. Okay, if you're one of these traders that wants to jump in and jump out really quickly, this is not for you. Okay, because this strategy takes time for these trades to develop. Sometimes they can take a month and you can get out with a bit of a profit, and sometimes it's going to take 4 or 5 or 6 months and then you can get out a profit. Okay, you can have a loss with this trade, so there's no guarantees of making a profit on any single given one trade. Okay, so just please make sure you understand that before I get into today's training. Now, let's actually walk you through this trading options, the most successful option strategy out there. The one thing I love about this strategy is, again, it's not about making massive results or really big results. This strategy is about making consistent results throughout the year that you trade. And so here's the deal. Okay, so let's actually get straight into it. Firstly, there's 2 different types of options that we can use. There's a call option. All right. So if we go out there and we buy a call option, now we're just going to talk about buying options. We're not talking about doing spreads or selling options and all that sort of stuff. We're just simply talking about buying options. Okay. So a call option, if we buy a call option, or say we buy a call option around about the same price that the market is right now, and the market goes up, then that option is likely to go up in value. Makes sense. Now, what happens if the market goes down? Well, this call option is also going to go down as well. So this is where you're going to lose. If the market goes down, your option is likely to go down. And if the market goes up, this is where you can actually make some money. Then on the flip side, you have what? You have then a put option. Now, with a put option, what is that? Well, it's basically like short in the markets. So say for example, you bought the option that was very close to where the price was right now, and the market went down, then you would actually make some money. But if the market went up, then you would do what? You would actually lose some money. So as you can see, right, like if you buy a put option, the market goes, it's like short in the market. The market goes down, you make some money. Market goes up, you lose some money. But if you buy a call option and the market goes down, market goes up, you can make some money. As the market goes down, you can lose some money. Now, here's the really good thing that I love about options. Let me build the foundation here. Then we're going to start to build the strategy for you. With options, the one thing I love about trading options is this. With options, that the option can only go to zero. So if I say spend $1,000 on an option, the maximum I can lose is that 1,000. That can only go to zero. Makes sense? But that's where I only can go to zero. But if the market moves in my favor quite a fair bit, this thing can go up, 100%, 500%, 1,000%. Makes sense? So the maximum risk you have is the position size that you put on with any of these options, whether it's a put option or whether it's a call option. Now, again, guys, I'm building the foundation for you to understand this, okay? So, what do we have here? The foundation is, okay, if I buy an option, it's going to cost me $1,000, and the market, and say this is say whatever option this is. If I buy an option, the maximum I can lose is my investment here. That means if it completely expires worthless, which you wouldn't. But if it completely expires worthless, you're going to lose 100% of its position. But if the market moves in my favor, say 1 month, 2 months, 3 months later, 4 months, 5 months, 6 months later, and the market's moved in my direction quite a bit, well, my option could be up 500%, it could be up 1,000%. Heck, it could be up even 2 or even 3,000% return, possibly even more, depending on how much the market moves and so on and so forth. With me so far? So I only can lose zero, but I can make a lot. So due to the fact that this is how the options work, it gives you a really good foundation of how this strategy works. Now, let me actually build what I'm saying here. What this strategy is all about is this. If any option, whether it's a call, okay, whether it's a call option over here, or whether it's a put option over here, what we do is that if I spend, say, $1,000 on the call options, I only know that I'm risking maximum $1,000. And if I spend $1,000 on my put option, I know that I'm risking a maximum of $1,000. Now, if I just traded the call options, if the market went up, guess what? I made some money. But if the market went down, guess what? I lost money. But if on the put options, just say for example on the put options, if I bought that, the market went down, I made some money. If the market went up, I lost some money. So I thought, okay, how can I do this without even having to actually try to actually pick the right direction? You with me so far? So you buy a put option, the market goes down, you make some money, it goes up, you actually lose money. If the market goes up on a call option, you make money. Market goes down, you lose some money. Now, here's where the strategy gets really, really, really awesome. So let's just say, for example, here it is. What I do is I buy both the call and the put at the exact same time. Now you're probably thinking, John, but wouldn't one hedge out the other? Bear with me for a minute. So what we do is this. We spend, say, $1,000. Let's use a simple number. Let's say we're going to buy the call roughly at the same price, and we're going to buy the put option roughly at the same price. This is where it gets pretty awesome. Let's say we're going to do a $1,000 for the calls, and we're going to do $1,000 for the puts. We're going to buy two sides here. We're going to spend $1,000 for the calls and $1,000 for the puts. And you're probably thinking, John, that doesn't make sense, because if the market goes up, your put option is going down in value. But if the market goes down, your put option is losing value, but your call option is making money. But remember what I said before, the option can only go to zero, but it can go up 100%, 200%, 300%. With me so far? So let's just say, for example, we bought this option and we had 12 months. Let's do this over here. We had 12 months of time in this trade. Makes sense? So let's say we got this trade on, and let's just say, for example, the market didn't do much for a month, okay? The market didn't do much for a month. Therefore, we're still in the position, right? It hasn't done enough for a month. We bought 12 months worth of time. We've still got 11 months worth of time. And then let's say, for example, scenario number one is what? The market breaks out and the market starts to move quite strongly up. And not only does it move strongly, but it starts to move in, say, a matter of, call it say 6 months. Again, this is a 6 month sort of trade here. Sometimes that can happen in a month. Sometimes it can happen within a week. Okay, we just never know. But let's just say, for example, 6 months later, this position here, the market is up, say, 20%. So if that was up 20%, what would happen? Well, your put option that you spent $1,000 on, it wouldn't be worth zero because there's still plenty of time in here. There's still probably 6 months worth of time in this option. So, but this option here, let's say, for example, the put option here. So if this was the case, the market went up 20%, your put option would be worth now what? 90% less. With me so far? So you only could sell your put options. This is P for put. For what? How much? $100. So you know what? You just lost 90% on your put options. But here's where it gets pretty awesome. But then the call options, because the market went up 20%, the call options now is up what? 200%. All right? And so, or up 200%, or maybe 300 or 400%. With me so far? So what this is this, right? So let's say for example, this call option here, right? $1,000. If it goes up 100%, then we're at what? We're at pretty much break even, aren't we? So, but let's say for example, this option went up 200%. So if this is at 200%, 1,000 and 200% is what? Now we can go back and we can sell our call options for 200% calls, which how much can we sell? How much can we get back in total? Right? We can get back in total how much? $3,000. With me so far? So the put option here, we lost 90% because basically we're just getting back time value here. But the call option, because the market went up so far, we actually made 200% return on that option. Now, depending on the volatility, that could be 300 or 400% return. Make sense? So let's look at this here. So in total, what did this trade do? Firstly, how much did the whole trade cost us? $1,000 to get the calls and $1,000 for the puts. So it cost us how much? It cost us, or firstly, we got how much back? We got $3,100 back. With me so far? Let's actually do this over here. So in total, the whole trade cost, what we actually got back from this trade was $3,100. With me so far? And so then, but how much was the investment to this? It was $2,000. So $3,100 minus the $2,000 our investment back leaves us with a $1,100 profit, which is roughly a bit over what? It's roughly about a 55% return on the trade, and we did not care where it went. Does that make sense? So this is the strategy in itself. This is the reason why it's so amazing. But what is the hardest thing about this strategy is that you need to give it time, because it may not do nothing for 2 months, 3 months, even 4 months. And then suddenly month 5 or even month 6, that market that you get involved with starts to take a big move up or even a big move down. And then when that happens, that's when you can start to get this scenario. So let's take it to the screen here. Let's actually use a scenario for the market going down. Okay, so we have a call option over here that cost us how much? Remember, $1,000, 1K. And then we have a put option over here that cost us how much? Remember, 1K. And again, this is a put option is going to cost us 1K. Okay, put option is going to cost us 1K, and the call option is going to cost us 1K. Now, let's say, for example, once again, we need to buy at least 12 months worth of time. Why? Because sometimes this strategy takes time for it to happen. You know, traders, I've done this strategy and I've been in the trade for 8 months and I got out with a 20% profit. I didn't make a loss in the trade, right? But it takes time for these trades. I said the most successful option strategy on the planet, right? I didn't talk about I didn't talk about how making massive returns. I'm talking about the most successful strategy on the planet. I'm going to get to in a minute the best time to get involved with this in any market and the best types of trades that I have found when it comes to this. But let's look at this here. So, for example, the market. Again, we spent $1,000. So, how much did the entire position cost us? Remember, it cost us how much? $2,000. All right. Now, let's say for example, the market went down. Okay, the market actually dumped, and it went down. And let's say we went through another crash, right? And our put options went down, and say 6 months later, 7 months, say 8 months later, the market's down 30%. Our options are up how much? Let's just say, for example, our options are up, let's just say 300% return. Okay, a 300% return. They're up 300%. Our put options here. So if you remember, the market crashed, it went down, and as you know, when the market goes down, it can go down really quickly. Let's say, for example, within 12 months, 6-7 months later, the market went through a bit of a real big crash, and now you can see now that this is now up 300%. Cool. Let's actually go back to here. So we can go back to our call option here, and our call option that cost us $1,000. This is now down 95%. We only can get back 5%. So the 5%, the call option, we only get back 5% because the 5% is what? Time value. There's a time value, which means how much time's left here, and there's also intrinsic value, which means how far. Oh, I won't get into that there, but you can look that up a bit later on. I don't want to get too technical on you here, but let's just say, for example, here, right? So I got 5%. So we're gonna go back to our little spreadsheet here, right? And we're going to sell our call option back for how much? $50. We got back $50. Oh, what a bad trade. So then we went to our $1,000 investment. Our $1,000 made 300% return. So our put option over here is going to do what? Our put option is now going to be worth what? $4,000. Our $1,000 investment, and then now that went up 300%, right? So 1,000, 2,000, 3,000. You made $3,000 on there plus the $1,000 investment. So you got back not what you made, but you got back how much? You got back $4,000. With me so far? So with this here, we got back in how much in total? We got back $4,000 in total. We got back from the strategy. So remember, we invested $2,000. We got back, say 7 months later, we got back from this particular trade here, we got back $4,050. It cost us $2,000 to get involved with it, to actually do the investment. So then $2,000 for the investment, but we got back $4,000. That means we actually made $2,050 on this one trade. Now I'm using a $1,000 as just a number here. This could be $10,000 each side. But as I said before, you can lose money. I'm going to get to that in a minute. So now we did what? We actually made 100% return, or a bit over 100% return on our investment in total. But what was the hard thing? The hard thing was watching the market. Sometimes the market might go up a little bit and the option's not doing much. Might go down a little bit, up a little bit, down a little bit, and then suddenly, up a little bit, and then suddenly 2 months later it starts to do that. And before you know it, that's when you can start to cash out. So there is no right or wrong time to be getting out of these trades, guys. And please don't go out there and start to throw money like, oh, let's just buy a call and put right now and let's see what happens. No, don't do that, guys, right? Because you can lose money with this strategy, right? It's not like a foolproof strategy, but people have asked me, what's the most successful option strategy out there? And this is it here. Now, how do you lose money with this one? Firstly, you don't buy enough time. The worst thing that I have done when trading strategy is only buying 3 months, 4 months worth of time. That's the worst thing to do. You want to be buying at least 12 months worth of time, because sometimes you're going to be in the trade for, as I said before, 4 months, 5 months. Sometimes you get into the trade and 1 month later, the market's taken off like a rocket. You can get out with now a 20% or even a 30% profit overall once you close down the whole trade. And you're like, cool, I was in that trade for a whole month and I just made 30% return on my whole investment. And then sometimes you might have to be in the trade for 6 or 7 months before you actually even just get out with a 10 or 20% profit. That happens sometimes. So the first thing is you don't buy enough time. Secondly is that you're not patient enough, not allowing it. And thirdly is that the risk is that the market doesn't move up or down enough for both of these to start to get into the multiple 100% returns, which is actually not that difficult, by the way, guys. If the market moves up 10% or 20%, that's when you can start to see some really, really nice returns. So if the market continues to do this sideways, goes up 4 or 5%, down 4 or 5%, up 4 or 5%, down 6%, up, and then does this for a while and doesn't really go up or down, that's how, because guess what? Now your put option's going down in value because it's not really going down, and now your call option's also going down in value because it's not really going up. That's how you can lose money. So we do this here, but the chances of the market doing that for 12 months is very, very slim. But it can happen. It has happened to me before as well too, and I've gotten out, but I haven't gotten out for like, losing all my money. I might have gotten out for say a 60% loss or 70% loss. So I still got back 30% of my capital. With me so far? So the whole thing about this is that the best strategy, if I went back to here, so the option strategy is that we're buying a call and a put. So let's walk it through this here. So the option strategy is we're buying a call and a put, and we're buying plenty of time, and we're letting it go. We're not in a rush. We're not gonna look at it, because what happens sometimes is you may get into a position like this, and you might be in it for 2 weeks, 3 weeks, 4 weeks, and both the call option and put option are down in value. If you look at your account, that's probably what's going to happen. If the market doesn't do much when you get into the trade, your call option is going to go down and your put option is going to go down. And that's why you need to be patient sometimes, because when the market goes sideways, that's what's going to happen. But then 2, 3, 4 months later, when the market does break out, we start to go through a big bull run or a big bear run, guess what happens? Now suddenly you start to get the scales tipped where one option is really, really exploding, the other option is pretty much going to zero, and now you're like, oh, I can get out with now, oh, look, my call option is now at 500% return. I can close down this whole trade and make some money. Now there's some other funky strategies we can do with this here, but this is the really basic. The reason why this is the most successful strategy is because you don't really care where it goes. You don't really care. We're not trying to pick the direction. You're just letting it go. With me so far? Now, as I said before, it can generate income when the market goes up or down. This thing I love about it, but it requires patience. But if you can be patient with this strategy, the consistency of profits by the time you close down these trades is phenomenal. Absolutely phenomenal. Some are like 20% profits. Others are like multiple 100% in profits. And sometimes every now and then you get these markets that just take off like a rocket, and before you know it, your whole strategy is now at 500 or 600% return. Makes sense? So now let's actually talk about why the best time to do this strategy. All right, let's actually go back to here for a minute. Oh, wrong one. Let's actually go back to this slide here for a minute. The best time to do this here is this. With options, the best time you want to be getting into an option, whether you're even just buying a call or buying a put, is when volatility is low. You want to get in when volatility is low. That's the best time to get in. And then when the volatility is high in that option, that's when you want to be getting out, because now volatility is also what? The volatility is also increasing that option there. So what makes the volatility be low with these options? When the market is doing this. It's not doing much at all. It's going sideways. With me so far? So it's just going sideways, just not really doing much. This might be it's just real small, and you might have had a volatile stock, right? The market's done this, and then something does this, and then suddenly 2 or 3 months later, or for a month or two, the market's just gone sideways. It hasn't really done much. Before it was volatile, now it's done much. Now, the benefit is this. When the market goes quiet like this, how often does it stay quiet like that? Now, what's the chances of this staying quiet for 12 months? Very unlikely, right? More times than not, we're likely to get a big move up out of here or a big move down. But eventually we'll break out of this, won't we? So the best time to do this is one, we actually jump in a stock that actually is volatile. It's just not, if you jump in a stock that's not volatile at all, and then you do this here, you're not really doing yourself a service here. Make sense? What you want to do is you want to see in the past that yes, we've had some really big movements in the market, and then suddenly the stock, for some reason, over the last month or two, it's gone really, really quiet. That means what? That means here we have low vol. Oh, that's you. Low volatility, which means now if I'm buying a call option here and I'm buying a put option here, they're going to be much cheaper because guess why? Because now the options, because the volatility are much cheaper and we're buying it pretty close to the price and we're going to let it go. And as I said before, the reason why it's the best time to do this is for two reasons. One, it's low volatility, and this is number one here. And number two is that when the market goes quiet like this is what I call the calm before the storm, right? And especially when the market, if you see a market that's volatile normally, and it's been going sideways for 6 months, 8 months, even 12 months like this, oh my goodness. There's a massive chance that market there is going to make an explosion move one way or the other. And when it does, you can start to pick up. I even, just as I was doing this recording, I even had a trading system that had this same pattern, but it actually met my trading setup. And I got out of that trade, not this type of strategy. I actually just bought the option. But you know, it made me 1,000% return. The reason why is because when it actually broke out of there, it made a massive move in that direction. Now, once again, I didn't do this strategy. I didn't buy the call and the put. It was just I saw this pattern, and then my trading system formed on that, which was a bullish setup, and I just bought the call option, and the market took off. But in this strategy here, right, the reason why one is that low volatility, so therefore the options, both the call and put, are cheaper because low volatility, and secondly, you have the calm before the storm effect. So when if the market does hold here, and then 6 months later, when the market's exploded up out of this level through here, which normally happens, or it explodes down, 6 months later, you can now get out of it. Even you can get out of this strategy now. And what I've found, guys, is most of your profits, depending on how long you hold for and so on and so forth, most of your profits are going to be around the 20% return. You know, you may even get a 50% return. And then I found probably 30% of my trades, 30% of my trades are above that 100% return or more. So that's all I was looking for. For me personally, when I was heavily just trading this strategy, I would wait for the market to move, and then as soon as I could get into a 20 or 30% return, I take it off quickly, close the position down, and go do it again. Do you know what I mean? And I was just after that consistent results. I was just after that. So I'd watch it every single day or every single week. I'd watch it. And then as soon as I can get in that 30%, sometimes even 40 or 50% return by the time I close down the whole trade, I would say, thank you very much. I took that 50% return, maybe 3 months later, and then I'd go find another stock I do this on and go reinvest that back in. And then 2 months later, I might have made 20% return on that, and I go reinvest that back in. And like, oh, you know, and then I might have made 100% return on this trade. Makes sense? But that's here. But remember, guys, you can make a loss. Remember I said before, the only way, the way you can make a loss is that the market does this and just keeps doing that for some reason. Make sense? So don't be throwing all of your money at your account. The way that I was doing this here, I had multiple of these trades going at once, but I had 5% of my account on any given one trade here. So if I had a $100,000 trading account, as an example, I would split that up to 5%. 5% is 5K. So therefore I would have $2,500 on the calls, $2,500. Now this is roughly anyway, you can never get exact, right? It's like $2,401 for the calls and $2,510 for the puts. You can never get the exact price, right? Because it's just the way the options work. So I always buy the options call and put while the market's open live, and I always make sure I get filled pretty close to that sort of 2.5% position. So, because if this is a losing trade, and sometimes there were losing trades, I'm not risking a lot here. But I reckon 80+% of the time, possibly even 90% of the time, you're going to generate a nice income from this. Now, the best trades for me have been stocks that are volatile between the 5 and say 15, even up to the $20 mark. For some reason, I don't know why, but it was this range here. These were the stock prices that when I got into these trades made big returns for me. And the consistent returns. When I got into them, they were volatile and I just could get out 20%, 30%, sometimes 100% return. And it was really awesome. Again, guys, the hardest thing about trading this strategy is you need to be patient with it. And if you're looking at your account every day, if you get into a trade, say around here, let's say, for example, you watch this market go sideways for a month, and you put a trade in here. You buy a call, buy a put, and then say the market goes sideways for another month. Guess what? Now your call options is going down in value and your put options going down in value because the market's gone sideways. So that's what you're going to expect. But what are you waiting for here? You're waiting for maybe a month later, 2 months later, who knows, right? For it to do that or it to do that. When that happens, call options go down in value, put options explode, and before you know it, you can close down the whole position, 50%, 100% return, and so on and so forth. Every now and then, the market might break down like this and then suddenly completely reverse back on you. It might break back up and then come back down like that. And it doesn't really do much for the whole 12 months. You close down your position for a loss and you move on. So I hope this makes sense, guys. This is the strategy within itself. And this is a quite phenomenal strategy. But the number one problem that you're going to have, and most traders have, is they're so impatient already with the market right now. Like they get so freaked out by one day. You can't be like this. This is not a get rich fast. But if you had a trading account and this is all you did, by the end of say 12 months or 2 years with that trading account, you could start to see nice growth on that by having small percent of your account on any given one position. I hope this helps you out, guys. Please start using this strategy. Maybe start paper trading this strategy first. And remember exactly all the things that I've talked about here, but do not go to start to throw your live money at this. Oh my goodness, that's so awesome. I can buy a call option, put option, and not lose money. No. Remember what I said, guys. You can lose money with this strategy. Just be smarter when you're doing. But the consistent returns can be quite phenomenal over a 12-month period. By the time, as I said before, I do 5% of my account. So if I got 5% of my account on one trade, and I've got 5 or 6 or 7 of these trades going at once. Now I've got what is that? That's 5, 10, 15, 20, 25, 30. So I've got about 30% of my account in the markets. Makes sense? And then on a rotation basis. So I hope that makes sense, guys. I just wanted this because I've had a lot of people ask me, what's the best sort of, when you're trading options, the most successful option strategy out there is this. But if you're one of my private clients and you listen to this right now, you already know the strategy to focus on, the absolute amazing sort of setup to look for. Just keep trading that because that's when we can start to see big results. But for you guys that are just starting out and you don't really have a good trading system, this is here is just to get you started.